Step by step, the complete home buying process in Texas. Davarus Bell, Home Concierge. Hey, how y'all doing? My name is Davarus Bell, your favorite Texas realtor and home concierge. And today I'll be walking you through the complete step-by-step guide to purchasing a home. From the moment you start thinking about purchasing a home to the day that you get your keys. Whether you're a first-time home buyer or it's been a while since you purchased your first home, this guide helps you feel informed, empowered, and ready. Let's dive in. Step one, understanding your why and readiness. Before you start browsing for homes, you got to ask yourself, why do I want to buy a house now? Am I financially, emotionally prepared for this responsibility? And you got to ask yourself, do I plan on staying in this area for 3 to 5 years? By being ready means more than liking houses on Zillow. It means having a stable job, manageable debt, and a budget that allows for a monthly payment, savings, and the occasional repairs that may occur while being a homeowner. Step two, check your credit and financial snapshot. Your credit score plays a huge part in the role of the type of loan that you will qualify for and the interest rate that you get. You want to aim for a minimum credit score of a 580 when applying for a FHA loan. By having a 580 credit score, you would then need to put down 3.5% of the price of the house that you're trying to purchase. So let's say you have a 580 credit score. Yes, I said a 580 credit score. You would need 3.5% of the price of the house that you're trying to purchase. For an example, pull your calculators out. If you're trying to purchase a $300,000 house and you need to put down 3.5% of that home, your down payment is $10,500. But let's look on the flip side. Say you have a 620 credit score. By having a 620 credit score, you then qualify for a down payment assistance program. Just say you don't have the $10,500 on that $300,000 house that you're trying to purchase. By having a 620 credit score, you then put yourself in a situation where you can qualify for 100% financing or a down payment assistance program that loan company or that mortgage company has to offer. Also, by having that 620 credit score, you also set yourself up to qualify for other programs. Let's just say you don't want to do 0% down because it may come with a higher interest rate. And let's just say that loan company has a program that's available for 1% down. It does happen. There are loan companies out there that do have different programs. They may roll them out different parts of the year, but there are programs that qualify where you may have to put 0% down. You may put 1% down. 3.5%, which is the minimum. So consult with your loan officer, consult with your realtor to get you with the right loan officer to see what type of programs they have available for you based on your credit score. But like I mentioned, a minimum credit score required for FHA loan is a 580 credit score. If you have a 620 credit score or better, you can qualify for 0% down, 1% down. But also note that by taking advantage of a down payment assistance program, there are going to be some stipulations that say, hey, if you decide to sell this home within 3 to 5 years, depending on the program, some programs say you have to stay in the property within 3 years in order for you to sell, and your down payment assistance is 100% forgivable. Some programs say that you have to stay in there 5 years in order for the down payment assistance to be forgivable. And then there are some that say, hey, we're only going to forgive only 50%, 60%, 70%, 80%. So once again, consult with your loan officer and ask the questions about when do you have to pay it back, if you have to pay it back, so on and so forth. Don't just be applying for something just to be applying for something or because your real estate agent encouraged it. If it makes sense to you, take advantage of it. Talk about conventional loans. The minimum credit score required for a conventional loan is a 620 credit score. The thing is with conventional loan, the higher credit score, the better the loan. So even if you want to purchase a property as an investment, conventional loan is the way to go because you're not required to stay in that property a year or whatever the case may be, because with an FHA loan, you have to stay in that property has to be your primary residence for at least a year. Talk about USDA loan, rural development loans. The minimum credit score required for a rural development loan is a 640 credit score. But with a rural development loan, a USDA loan, there is a lot of stipulation when it comes to income, location, so on and so forth. So definitely consult with a loan officer to see that the house that you're trying to purchase is in an area that qualifies for a USDA loan. VA loans do not have a minimum credit score required. But note that if you have a lower credit score, because lenders like for you to have at least a 580 credit score, 620 credit score. If you have a 500 credit score and you've had late payments in the last 12 months, you will not qualify for a VA loan. But let's say you have a 500 credit score and you haven't had any lates in the last 12 months. You may potentially qualify for a VA loan, but I want you to note that there are other stipulations that's required, because you may have the credit score is required for these loans, but you also got to take into account debt to income ratio, how much money you make versus how much money you spend on a car note, or credit card debt, student loan debt, personal loan debt, things like that. Get a copy of your credit report. Go to myfico.com, go to the Experian app. Look at all errors you have on your credit report, collections, high balances that need to be addressed, paid down, so on and so forth. But I'm gonna give y'all a pro tip. Pay down your credit cards below 30% utilization to avoid applying for a new credit during this process. So what that means is trying to keep your credit card utilization down as low as possible. Me personally, I prefer my clients to have no credit card debt, because I don't want them purchasing a house and they have to deal with credit card debt, high interest, so on and so forth. I don't want my clients going into a home buying process with additional debt, which is technically considered bad debt. Another pro tip: make sure your student loan debt when purchasing a home. Make sure your student loans that are in some type of income-driven repayment plan. Another pro tip: find a real estate agent who will sit down with you to go over your credit report with you, to show you what errors you have on your credit, what type of utilization is needed, things that you can address that don't require you to pay a credit card repair person. Not trying to say, don't go get a credit repair person, but there are other things that you can do without paying someone else that can make your credit score go up. So consult with a real estate agent who has knowledge in that area, and they can help you. Now you found your real estate agent, you know why you want to buy a house, you check your finances. So now we on step 3. Step 3, get pre-approved by a lender. Find a loan officer, mortgage officer, whatever name that they go by, find them to get pre-approved. Before you start looking for a house, before you start house hunting, get pre-approved by a local lender, somebody who's familiar with the area. Because what you want to know is how much home you can afford. You want to know what's your estimated monthly payment. And also you want to know what loan program you qualify for. Like I said, FHA loans, VA loans, USDA loans, conventional loans, bank statement loans. There are so many loan programs that you can qualify for. I mentioned a bank statement loan, somebody who, self-employed, who may not file their taxes correctly, or who can't prove their income based on their W-2s and their tax returns, or whatever the case may be. You can, as long as you have 24 months of bank statements, you can qualify for a bank statement loan. A bank statement loan may require a higher credit score. It may require a little bit more money down, but there are other programs that if you qualify for it, you can still purchase a home. What your estimated monthly payment is. So if you want a $1,200 payment, let's try to find you a house that's a $1,200 payment house. You want a $2,000 payment. Let's find you a house that is a $2,000 a month mortgage. If you want a $3,000 month mortgage, let's find you a house that qualifies for that. Let's not get out here just looking for houses and you don't know what you qualify for. In this pre-approval process, the lender will look at your last 2 W-2s or tax returns, your most recent pay stubs, 2 months of bank statements. They want to look at your ID, your driver's license, and your social security card, any recurring monthly payment debts that you have, like a car note, student loan, so on and so forth. They'll issue a pre-approval letter that will include with every offer, that needs to be included with every offer to provide your financial qualification. They will provide you with this pre-approval letter. A pre-approval letter got to be provided with any offer that you make on any house that you're trying to buy. By providing this pre-approval letter, it shows that you are financially qualified. What financially qualified means is I've passed a lot of these conditions that's required, and I'm ready to purchase a house. There is a difference, and you must know this. There is a difference between pre-qualification and pre-approve. So you need to know the difference between the two. We want you pre-approved because by being pre-approved, it shows that you have checked off a lot of boxes in this home buying process, meaning the lender has verified your information. They verified your identity. They verified the debts that you have, the good debts, the bad debt, all the things. They verified these things. So we looking for the conditions and making sure those conditions are checked off. And I know I mentioned earlier that, one of the most important things is to find the right realtor when purchasing a home. But getting pre-approved is just as important as that. So all of these steps are important, but you definitely want to make sure that you're pre-approved because you want to know what you are buying and what you qualify for, because nothing is like going out looking for a home and you looking at $500,000 houses and you qualify for 300,000. So let's stick to your budget. Let's stick to what you can afford so that you are comfortable and we not getting foreclosed within a year or two. So let's be smart when it comes to this process. Step 4, understanding the loan programs and assistance program that you will be qualifying for. And like I mentioned earlier when we was talking about the FHA loans, Texas offer a variety of loan programs for first-time home buyers and repeat buyers. FHA loans, conventional loans, VA loans, USDA loans, 100% financing programs, as well as down payment assistance program, which if you're talking to somebody and they say DPA, that's what they're talking about, down payment assistance program. So FHA loans, minimum down payment is 3.5% down. You have more flexibility credit requirements with the FHA loans. Conventional loans, 3% down to 5% down, no upfront mortgage insurance. If you don't know what mortgage insurance is, like I told you, PMI, that is that private mortgage insurance to protect the lender's money. But I've seen programs out there where conventional loans can go as low as 1% down. You just got to find a mortgage company that offers that program. VA loans, no money down for veterans and active duty military. That's a beautiful loan. No money down. If you're 100% disabled, you don't have to. You're tax exempt. There's no funding fee. There's so many beautiful things about VA. So if you served in the military, you have a DD-214, you're active military, you definitely want to consult with a mortgage loan officer to see what you qualify for, because that is a beautiful loan. And to all the veterans out there, thank you for your service. I come from a military family. My brother and so many other people in my family served in the military. So thank you for your service. USDA loans, no money down, but you got to stay in a rural area. Rural areas normally are areas that's outside of the city limits. So if we talking about Texas, let's say for an example, let's do Dallas Fort Worth. So an area that potentially can qualify for a USDA loan is some parts of Kaufman County, Johnson County, Henderson County, Navarro County, Hunt County, Hood County, Grayson County. I want to say some parts of Denton County, up towards like Boyd, Rome. I think that's Denton County, up towards that area on the outskirts. And then same like if you're in the Houston area, because I service the DFW area, I service Houston area, and I service San Antonio area. So anything that's not in the city limits qualifies for the USDA loan. 100% financing programs are going to be available through credit unions and community lenders. So like Simmons Bank, Credit Union of Texas, places like that. They offer, a lot of those credit unions offer those 100% financing programs. But once again, consult with a mortgage officer who work at these institutions to just kind of see what type of programs they have available for you based on your credit history, so on and so forth. Down payment assistance program, DPA. Once again, this is a grant or a second lien that helps cover the down payment and or your closing costs. Step number 5, hire me as your real estate agent. Nah, I'm just playing. This is where I do come in at. As a dedicated realtor and home concierge, my job is to walk you through every step of the process, provide you expert advice on neighborhood, school, and home value, negotiate aggressively on your behalf, coordinate with lenders, inspectors, title company, and appraisers, but give you options. Once again, just because I have a rapport with this lender, I can't suggest this lender to you. What I do is give you a few different options that you choose from that you feel comfortable with. Same go for inspectors, title companies, and appraisers. I will help you avoid common mistakes and stay, compliant with Texas real estate laws. And as a homeowner myself, I think personally, this is just my personal opinion, I think your real estate agent needs to be someone who purchased a home before, been through the home buying process before, and has that emotional connection when it comes to purchasing a home. I personally don't think that somebody who never purchased a home can talk to me about the emotional aspect or the things that's needed to, with being a homeowner, honestly. And yeah, you may have sold houses and stuff like that, but you still don't. You've helped people purchase a home, but you still can't tell someone about the home buying process if you haven't been through it yourself. Step number 6. Now you found your realtor. You found the lender. You know what your finances are. You have your upfront money. You have all the things that you need. Now is the favorite part, what people love. Now it's time to go out looking for homes. Based on your budget and your goal, I'll set up a custom home search personally and schedule showings. We'll evaluate price, location, commute, school ratings, age and condition of the home, HOA fee, mud taxes, a PID, future resale value, which is very important. A lot of people don't even care to know what their house can potentially sell for. I won't go into too many details because when it comes to that, I have my own thought process when it comes to that. But we're not going to dive too deep in that. But resale value is very important when it comes to purchasing a home. Even with the taxes, mud taxes, potential taxes, what the taxes is going to be, potentially in the next 5 to 10 years. Your taxes will go up. That's evident. You will have a tax increase depending on the development of the area. Let's talk about school ratings, depending on your kids. If you have kids, how important the school system is they A rated, B rated, C rated, D rated, age and condition of the home. Was the house built on or before 1978? If it was built on or before 1978, we need to do a lead-based poison inspection to make sure the house does not have lead-based poison. Price, make sure that we are super aggressive when it comes to putting in an offer for a house. I'm gonna tell you right now, if you pick me to be your real estate agent, I'm known, I got this bulldog on my shirt, but I'm known to be a bulldog when it comes to real estate. And it's documented when you read my reviews, there are clients who actually call me the bulldog realtor or Mr. Stand on Business, as they like to say. So that's definitely one of my expertise, which is negotiation. So I will try my best to negotiate the best deal for you and your family. Also note that during this process, I will be taking note of all your likes and dislikes to refine the search until we find the right house. What that means is we go out and we look at a batch of homes. We go see 4 or 5 houses, and let's just say none of those houses are the houses that you love. And I'm gonna let you, so how I operate, I'm gonna send you the houses, and then you're gonna click based on location, all the things that you like based on the pictures. Let's say you send me 5 houses that you love that I've shown you. And we're gonna go look, we're gonna schedule a showing, we're gonna go look at those properties. We look at those properties, and then out of those 4 or 5 properties that we've seen, you say, Davarus, these aren't the houses that I like. I don't like these houses, I hate these houses. During that process, I'm gonna be writing down and taking notes of everything, your dislikes, your likes, so on and so forth. So I know that the next search that I send you, those houses are gonna fit so much into what you need, because now I have an idea of what you're looking for. Step number 7, we got to submit an offer on that house that you like. Once you found the perfect house, I'll draft up a competitive offer that includes your offer price, option period. Usually the option period is between 5 and 7 days. That's that time that you need to make sure that this is the house that you want and that we get a home inspection. We got to take your earnest money to the title company. Earnest money is normally 1% of the price of the house, but I've seen situations where some sellers want more consideration. They want a little bit more earnest money in order to accept the offer, because they want to make sure that you are bought into the process. A lot of builders require you to put down a little bit more in earnest money. Your option fee is around $150. The option fee, you're technically paying for that option period, to view the home, and that money goes to the seller. So it could be $100, it can go up to $300, just kind of depending on the seller. You're paying them for those 5 to 7 days to make sure that this is the property for you. The offer is going to include a closing timeline. Normally it's 30 days. It could be longer if there are any contingencies. It could be shorter depending on, your lender, appraisal, so on and so forth. I've seen closings happen. I've seen closings happen 7 days. I've seen closings happen 14 days. I've seen some wild things in real estate that still kind of like blow my mind. Appraisals get done quick. One day clear to close. I've seen some wild stuff. Contingencies, financing appraisals, home sales. So if you got a house that you're trying to sell, so contingency, let's just say you have a house that you're trying to sell, but you really want to purchase this other house. So in order for you to purchase this other house, it is contingent upon you selling your other home. So that is contingency, so you have stuff like that that's in the offer. Temporary lease back. So let's say the house that you're trying to purchase, they, need to pack their home up, or they need to ensure job relocation, or whatever the case may be. So that may be a contingency, temporary lease back. So yeah, those things would be in the offer. My number one goal is to make sure that you secure a home without overpaying or giving up critical protections. I got to make sure this is the house for you. I got to make sure this house is in tip-top shape. I also got to make sure you're not overpaying for a house. That's just me. I don't believe in someone having to overpay for a house. So just note that if I become your realtor, my number one goal is to make sure that you do not overpay for your home. Step number 8, inspections and negotiation. So after the offer is accepted, we enter into the option period. You'll then hire a home inspector who evaluates the home condition, the roof, the plumbing, the foundation, the HVAC, so on and so forth. We'll receive a report with recommended repairs. From there, we can, request repairs, ask the sellers for credits, renegotiate the price, or we can just walk away and then you keep your earnest money. We just got to make sure we're within that option period. This is your safety net to avoid buying a money pit. So that option period is so important because we're going to make sure that this is the house for you. We're going to make sure that you're moving into a house and, you ain't got to worry about foundation issues, the HVAC messing up, so on and so forth. So we're going to do all of our due diligence during that option period. Step number 9, appraisal and loan finalization. So what that means is your lender will order an appraisal to ensure that the house is worth what you're paying for. If the value comes in low, we can either challenge the appraisal, we can negotiate with the seller, or cancel the contract if the gap can't be resolved between what the house is selling for and what it's worth. You can just cancel the contract and walk away. Meanwhile, your loan does go into underwriting, where they will verify every detail. Be prepared to submit updated documents quickly. What that means is, I know, a lot of people get, bent out of shape, or they feel away once you get to the end and they'll be like, oh, I already gave you my W-2. I already gave you my bank statement. I gave you this, I gave you this. A lot of times they're asking you for these documents to make sure nothing changed, like job verification, making sure you wasn't fired, or, you got demoted, or even if you got a raise. By getting a raise, it may help you in this loan process. So During that appraisal time and the loan finalization, that's like the home stretch. That's like you getting ready to get that C to C, which is clear to close. Step number 10, title work and homeowners insurance. The title company will research the property to make sure it has no unpaid liens or ownership issues. You also need to choose a homeowner insurance required by your lender. Consider flood insurance if you're in a flood zone, but I don't think you want to buy a house that's in a flood zone. Review your closing and disclosure with your lender 3 days before closing. With homeowners insurance, the higher the credit score, the better, the cheaper the homeowners insurance. That's a little nugget I can give you. Always make sure your realtor is making sure your property is not in a flood zone, because nobody want to buy a house that's sitting in a flood zone. And review your closing disclosure 3 days before. And the reason why you want to do that is because you want to make sure you're bringing the right amount of money to closing. You want to make sure that, everything is in order. You know what your monthly payment is. You know how much money you got to bring to closing. You got to know how much, these taxes are being paid, making sure that your mortgage, just say if you're selling a home, the mortgage is being paid off and it's the right amount. Making sure the taxes are right, HOA. It's a lot of things you want to be sure that it's correct on that closing disclosure. You review it 3 days prior, which gives the lender and the title company time to balance their all the money that's going to be going through in this transaction. But step number 11, this is your final walkthrough and closing day. Before closing, we'll do a final walkthrough, or you should do a final walkthrough to make sure all agreed repairs are done and the property is in good shape, meaning, the condition hasn't changed since you put in the offer for the house. Then we'll meet at the title company, we'll close, or we can close remotely, meaning we can go to the title company, we can go to one of my offices, or we can do it at your house. We can close wherever you want to. The choice is yours. We'll sign all the final documents and the deed paperwork, bring a cashier check or wire transfer, for your closing costs. Get your keys. We're going to have fun, exchange gifts, laugh, take pictures, all the good stuff. And then boom, congratulations, you're a homeowner. So the process isn't like super, super, super complicated. If you can lease a house or rent a house, you can purchase a house, So step number 12, move in and post-close support. After closing, I'm still here for you. Meaning, just because you purchase a house don't mean like, oh, I won't hear from Davarus Bell anymore. And once again, make sure your realtor is someone who don't think like that. Like after the transaction, you can't call them anymore for any advice, how to file for your homestead exemptions or any exemptions, so on and so forth. But what we will do after closing is I will help you file your homestead exemption, refer trusted movers, handyman, landscapers, so on and so forth, support you with questions about your loan, taxes, and home ownership journey. You're not just a client to me. A lot of my clients turn to family or friends, and I'll be your go-to realtor for life. But most of my clients turn into friends and family when they deal with me. But buying a home is a journey. But with the right team, it doesn't have to be super complicated. It doesn't have to be stressful at all. If you're thinking about taking the first step, let's schedule a free consultation. It don't cost you no money to meet with me to discuss your real estate needs. It's no pressure, just a bunch of good information. And I always tell people, even if you don't make me your realtor, make sure you take the information that I provide you, whether it be on this video or through social media. Make sure you take that information and you use it so that you don't get messed over in the home buying process, because y'all would be amazed at how many people who don't get the right realtor, who don't get the right lender, and they foreclose in a year or two. So I don't want that for you. I don't want that for your family. I don't want that for no family. So just be careful. Pick your real estate agent right. Pick your lender right, and pick the loan type right that works for you and your family. And always stay in your budget. Always. Don't live outside of your means. Don't try to be like the Joneses. Home ownership is beautiful. I'm not anti-renting, but I would prefer purchasing a house over leasing a house any day, because that's your money. You know, that's your money. You're putting money into this home, building equity. So why wouldn't you own a house? So just to do a quick rundown, number one, make sure you find the real estate agent that you want to do business with, that you like, and who fit what you're trying to accomplish, who's going to give you the right, services, give you the best, fight to get you the best deal, so on and so forth. From there, you want to get with a mortgage officer. Sit down with that mortgage officer the same way you're doing with that lender to review your credit profile and your finances and see what you can get approved for. From there, get pre-approved. Once you get pre-approved, you have that armor in your hand and you can go out and find the home for you. Go out house hunting, find the house that fits for you. Make sure it's in the correct school district. Is where you want to be for work, so on and so forth. Once you find the house, time to put in an offer. That's my favorite part, the negotiation part. Make sure that we are making sure you get the best deal possible for this home. Making sure that you're not overpaying for the house and you're bringing little to no money to the closing table. That's my number one goal. And from there, we go into, making sure this is the right house for you, the home inspection, that option period, making sure you do have your earnest money, 1% of the price of the house. So if it's a $300,000 house, your earnest money is $3,000. Option fee, $100 to $300. A home inspection cost can range between $350 up to $500. So make sure you have your upfront money, because you're gonna need that before you put an offer on the property, because you gotta take it to the title company. From there, if everything checks out, the house is good, we get to the closing table. Once we get to the closing table, it's a bunch of fun, celebration. After the closing table is when the work starts. And what I mean by that is, we wanna make sure that you file for your homestead exemption, make sure all your warranties and stuff are set up. If you do have a home warranty, if the seller gave you funds to purchase a home warranty, you wanna make sure those things are set up. You wanna make sure your appliances are protected. You wanna make sure your roof, foundation, all the things are protected in your home. And then from there, invite me to your housewarming. Let's have some fun and introduce me to your family, your friends, your loved ones. Let's celebrate together. So once again, I hope this video is super informative to you and your family. If you know someone who need my services, don't hesitate to give me a call. Share my contact information. If you need my services, do not hesitate to give me a call. I'm here to help any way possible, even if it's just for information, because I know it's a lot of real estate agents who don't have the information that I have. And if I can save you from getting messed over in the home buying process, my pride, my ego don't get in the way of my services. So if I can help you, I'm willing to help you any way possible. I hope y'all have a great day. If you need me, give me a call, 817-617-9654. My email is dbell, DBELL, at betterdevelopmentrealtygroup.com. Love y'all. Hope y'all have a great day.